So, what if the worst failure of your career was actually the secret to all your future success? Today, we're digging into the story of David Ryan. He's a three-time U.S. investing champion, a protege of the legendary William O'Neill. And he developed this simple but, incredibly powerful system, but only after the market taught him a lesson that he would never, ever forget.
So here's our roadmap. We're going to follow Ryan's path, right? From that catastrophic loss all the way to market mastery. We'll break down the key lessons he learned at each stage. And we're starting with the failure that really changed everything for him.
Long before he was winning championships with these huge triple-digit returns, Ryan was just another trader getting absolutely humbled by the market. But it was this early, just brutal experience that really forged the discipline for his entire system.
Yeah, that's how Ryan himself described what happened to his account back in 1982. See, he had a lucky start in a bull market, even doubled his money, and he thought, hey, I've got this all figured out. But the market, well, it usually has other plans, doesn't it?
And the damage was just staggering. His account cratered from $60,000 all the way down to just $16,000. That's a 73% loss. I mean, he was getting chopped up by the market, and nothing he did was working. But instead of quitting, he did something that would define his entire career.
He spent an entire weekend just poring over every single trade he'd made, and this crystal clear pattern emerged. It wasn't bad luck, it was a repeated, fatal error. He was chasing stocks after they had already made these huge price jumps. He was buying them when they were extended, which basically means he was showing up to the party way, way too late.
All right, so let's get to the core revelation that came from all this analysis. The simple truth he built his entire system on. This is where he decided to cut out all the noise and just focus on what really, truly moves a stock. So here's the crucial point. Ryan realized you don't need all these complex indicators or fancy algorithms. He said he could do just fine with only two pieces of information: the price action of a stock and the volume, the number of shares being traded. Everything else was just noise.
And this is how you start to read the market's language. In a healthy uptrend, right? Big price moves up are supported by high trading volume. It shows conviction. But the pullbacks, they happen on low volume. In a downtrend, it's the exact opposite. The big selling days happen on huge volume. Simply figuring out which trend you're in, well, that's the crucial first step.
Now, this whole philosophy is grounded in the CAN-SLIM methodology from his mentor, William O'Neill. It's an acronym, and each letter stands for a key characteristic of history's greatest winning stocks. We're talking things like strong earnings growth and new products. It's not about predicting the future, it's about recognizing these winning patterns as they're happening. Okay, so you know what to look for. But just finding the right stock, that's not enough. The next crucial piece of the puzzle, and really what separates good traders from the great ones, is knowing exactly how much money to put on the line. Take a look at this number. In 1986, while he was earning an annual salary of just $34,000, David Ryan's capital gains from the stock market were a mind-blowing $255,000. I mean, that is over 7 times his salary. So how is that even possible? Well, it wasn't through 1,000 tiny little wins. He did it with a deliberate strategy of concentration. Instead of, diversifying into mediocrity by spreading his money really thin, he focused his capital on his absolute best ideas to get that super performance.
And he did this with a strict set of rules. For most people, he suggests no more than 4 or 5 stocks. You start with a meaningful position, let's say 10%. If the stock acts right and moves in your favor, you add to it, building it up to a 20% position. And for a true market leader, a stock that is just dominating everything, it can become up to 40% of your entire account.
All right, so let's get into the specifics of how he actually finds these opportunities. This isn't about guesswork at all. It's a repeatable, visual process for reading a chart and timing your entry perfectly.
The beauty of his whole approach is just how simple it is. He's not staring at a dozen different indicators on a screen. He's basically training his eyes to recognize the same basic pattern that has shown up before huge stock moves for over a century. It's like a visual checklist.
His process has 4 pretty simple steps. First, only buy stocks that are already in a confirmed uptrend. No bottom fishing or trying to catch a falling knife. Second, look for it to form a solid base, which is just a fancy word for a period where the stock rests and trades sideways. Third, you identify the precise breakout point from that base. And finally, you confirm the move with a surge in volume, because that signals that the big institutions are buying in too.
And I love this. His method for finding that buy point is refreshingly simple. He basically says, just draw a line across the top of where most of the trading in that base happened. That's your trigger. You ignore the one or two noisy price spikes and focus on that area of control. That's the real pivot point.
Okay, so we've covered the technicals, the how-to, but this final lesson is maybe the most important one of all. It's the psychological shift that separates the one-hit wonders from the traders who can win consistently year after year.
Kinda ironically, after winning the championship 3 years in a row, Ryan's performance actually started to suffer. And the reason was this subtle but really critical shift in his focus. He stopped concentrating on executing his process flawlessly and started obsessing over the outcome, over the results.
And that leaves us with a really powerful question for any complex pursuit, not just trading, right? Are we focusing on flawlessly executing our proven process, trade after trade, day after day? Or are we letting the emotional highs and lows of chasing short-term results dictate our actions? For David Ryan, the answer to that question made all the difference.